Boom shakalaka, Bitcoin broke $50,000 for the first time since May. Why Bitcoin may be facing some steep resistance until October, and why you should still be very, very excited. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we are talking about Bitcoin's path to new all-time highs and when specifically this is going to happen. And we're going to talk about some specific price levels that Bitcoin may be seeing some resistance. Now, before we get into that, guys, make sure to like, subscribe, click the notification bell. Also, come join us over on Twitter at The Crypto Love, where every week we give away one of these sweet shirts. And finally, guys, today's episode is sponsored by Tree DeFi, the first NFT marketplace backed by real trees planted all over the world. The Tree DeFi NFT marketplace offers a revolutionary DeFi experience where users can purchase, trade, and own NFT trees backed by real trees, which generate carbon credits verified on the blockchain. NFT trees can be purchased using seed tokens and verify each tree's species, location, age, place of birth, and CO2 offset. Over time, NFT trees generate CO2 tokens that companies and individuals can either sell for profit or exchange for real carbon offset certificates. The Tree DeFi app offers trading features for Seed and Tree, the governance token, and access to yield farming and staking pools that you can farm tokens like Cardano and BNB with some excellent APRs. Also, later this week, they'll be announcing an exclusive VC collaboration for the project. Start building your NFT forest right now. Visit treedefi.com and check out the press release linked below to learn more about the project. Now, on to Bitcoin. We are starting to hear some, maybe bearish, you could call it, maybe bearish things about Bitcoin. So William Clemente saying 29,696 Bitcoin moved onto exchanges in the last week. Not a trend we want to see continue. As a matter of fact, we were enjoying Bitcoin moving off exchanges. That's followed up by posts on TradingView like Bitcoin to $18,500. We're looking for the worst case scenario. This guy, even though he doesn't have any reason, he's saying, worst case scenario, we could see a 63% pullback like what happened from COVID, bringing us down to somewhere between $18,000 and $23,000 if we measure it from the all-time high or from where we are today. And while these things may happen, I want to point at the Bitcoin chart. Right now, it seems like Bitcoin is following a bit of traditional market rhyming poetry. You could call it traditional market poetry. Sell in May, go away, come back for October. That's basically what Bitcoin looks like. Whereas if you would have sold in May, you would have pretty much sold the top back here. And then coming back in October, that's about when we're going to see a breakout, when we're going to see Bitcoin hit new all-time highs. Now, Bitcoin right now is in this ascending wedge, and it's just been forming this pattern really nicely right here. We saw a little bit of resistance at 47,000, seeing a little bit at 50,000, and we can expect some resistance from these two upper peaks right around 55,000, and probably some resistance at 60,000 as well before we would break new highs, because hey, big evens are always resistance. But other than that, there are a couple other levels to keep an eye at. So we're right at the $50,000 resistance where it bounced off of, Bitcoin bounced off of here and also here. But going up, we have some resistance between where we are now, 50,000 and 56,000. Really, we might see a little bit at 52, where Bitcoin bounced off of way back here in March and also back here in May. So we may see a little bit of resistance there, may see a little bit at the top of 55, may see a little bit at 56, and also at 57 before pretty much onto October. And based on the current trajectory that Bitcoin is on, that's putting us almost exactly at October. Right here, the middle of the O is when October starts. If we follow this pattern, just keep continuing it up, it'll put us towards new all-time highs right on time for October. Now, what's going on behind Bitcoin right now? Well, good news. Compared to February when Bitcoin crossed 50,000 for the first time, the on-chain dynamic has changed. In February, less and less people were accumulating. Now, more and more people are accumulating. You can see back here in February, less people. It was going from basically this area, the orangish, down to the blue. Now we're back to much deeper orange than we were at previous price levels. So that's looking good for Bitcoin. As a matter of fact, the number of short-term Bitcoin holders is at an all-time low. People are believing in it more and more. And not only that, they're hodling like we haven't seen before. A record 84% of Bitcoin supply has not been moved in over 3 months. Now, if you take a look at the supply last active 3 months ago, so the hodlers, you can see it drops off significantly when we have peaks. Like this was the 2017-2018 peak. This was the one that we just had recently. Definitely not as far of a drop off as back in 2017. But I did find it very interesting how these drop-offs have like a little hump in the middle. And also here, a little hump in the middle. It's kind of like people selling and then being like, oh no, it's going up higher, and then selling again. Pretty interesting. I wonder, my big thing that I wonder is this actually the first butt chin of this double butt chin sell-off? Because that would make it absolutely huge. Now, stablecoins are starting to flow back onto the markets, which actually is somewhat contrary to what we're seeing here with Bitcoin flowing back into markets. So we're having both Bitcoin and stablecoins flowing back into the market. Now, historically, when stablecoins flow into the market, that generally means prices going up. When Bitcoin flows in, maybe not so much, but we'll kind of have to see how this plays out over the next couple days. And this is very interesting. So as of right now, people are still shorting Bitcoin a lot more than they are longing Bitcoin. And that could set this up for an absolutely huge short squeeze should the price move up. So the long to short ratio is 0.67. And because of that, if we start seeing the price rocketing up, and I got to say, right now, Bitcoin is on a very, very steep ascent. So if we continue to see the price pop up, well, it could pop up even more due to all these shorts that could potentially get squeezed. Which brings me to this equation right here. I think this is very important to understand. And it's not based on, technicals. It's not based on charting. It's based on recognizing the underlying math behind Bitcoin. Now, I missed Bitcoin Infinity Day back on August 21st. But this is the main math equation you need to understand for Bitcoin. Like, the reason why Bitcoin is powered by NGU technology, numbers go up technology, is because the numerator here is actually infinite. You've heard the Fed talk about how they have infinite money and how they just keep on printing money, and especially with COVID and all of this stuff and the Delta variant and whatever else, they're just going to keep printing money. But what can't change is the denominator here, 21 million Bitcoin. And realistically, this number gets smaller and smaller over time because people lose Bitcoin, they lose access to Bitcoin, they die without giving the Bitcoin to other people. So all types of things. This number is actually decreasing. So because of that, if you can do basic simple math, you will see that $1 million Bitcoin is way under what it's going to be. $10 million, way under. $100 million, way under. Because infinity divided by anything is infinity. That's the actual price that a Bitcoin is going to be. Infinity dollars. And once you wrap your head around that, it's no longer a short-term gain. All you need to do is hang on to your Bitcoin, and you'll be set. Because if you want $1 million, yeah, hang on to it for 10 years. If you want infinity dollars, hang on to it for a little bit longer. Which brings me to this thing by Raoul Pal. I talked about it earlier in the week, but I think it's worthwhile bringing up again. He says he still sees many people calling crypto a bubble, and thus it's unsustainable. The price looks pretty crazy. And the same was true with tech stocks and their overvaluation. But the problem is that they were looking on it on a wrong scale. This is on a log scale. You can see the tech stocks. The tech bubble of, 2000? This was the peak there. We were well above the peak there. And this is a logarithmic scale. So it's at least 10 times higher, actually 15 times higher than we were at the peak of the tech bubble. And, it crashed. But, Bitcoin crashed back in 2017, 2018. I was talking with my buddy Rain about this, how we actually survived a Wall Street crash, the great crash of the Great Depression. Stuff went down 90% back then. Guess what? In 2017, 2018, cryptos went down 99%. We survived something worse than the Great Depression, worse than the Wall Street crash. We survived it. And guess what? Because of the network effect, things keep going up. And as a matter of fact, if we take a look at Bitcoin, aside from this big bubble in 2013, it's pretty much just following this logarithmic chart up. Which brings me to something that I was just reading that I think is important. This was in Kiyosaki's book, The Cash Flow Quadrant. And they did a study where they took a look at all the people who have gone from being poor to wealthy. And they all of them, had these three things in common. One, they maintained a long-term vision and plan. Two, they believed in delayed gratification. And three, they used the power of compounding in their favor. So, they believed in a long-term vision and long-term plan. This right here, have a long-term vision. Yes, it would be nice to be a millionaire this year or whatever. But, guys, Bitcoin and cryptocurrencies are not going to be over at the end of 2021. We may go into a bear market, but it's not over. It's really only the beginning. That's point one. Point two, they believed in delayed gratification. Yeah, sure, while it would be cool to drive around in moon Lambos and Bentleys and Hellcats and whatever else you drive around in, while that would be great, delaying gratification, you're guaranteed so much more, because if you look at how these charts keep going up and up and up, it's going to be worth a lot more in the future. And third, they use the power of compounding in their favor. So by investing in cryptocurrencies, you're basically doing that. I mean, Bitcoin goes up 200% year on year, which is pretty awesome compounding, but also making sure that you do capture your gains and pay off bad debts, because those work against you. So you definitely want to have things that work in your favor. So guys, that is all for today's video. I'm very bullish for Bitcoin. I can't wait till what we see in October, but we do have some pretty steep resistance until we get there. So thank you very much for watching. Guys, if you haven't checked it out, you definitely want to check out my Crypto Love 100x video series. These videos on average, every coin I've picked is outpacing the market on average by 60%. Like if you want to know undervalued coins to pick out, you'll definitely want to take a look at them, because they're doing better than you could do by buying every coin on the marketplace. And guess what? A number of them have outperformed Cardano, outperformed Solana, so you'll definitely want to check out those video series. Thank you guys for watching. Thank you to Tree DeFi for sponsoring the episode, and I'll catch you guys later. Have a good one. Peace.